Traders, welcome to Charts and Coffee. Just saw a pretty raucous PCE release this morning. We trade hot zones from time to time, depending on the event in the Sector Secrets Mastery Room. And hey, I'm going to talk about what we did here this morning, because one of my favorite things to do is talk about something that I don't get a lot of opportunity to do, which is walk traders through a loss, right? I know. Wait, traders lose? Yeah, contrary to popular belief, traders will lose from time to time. The day trade on a PCE morning is a futures trade. Some traders will trade Forex. I used to in a past life. And what we have is an event where we're getting a really important, arguably the most important hot zone that the Federal Reserve is going to pay attention to. Their models are built upon the PCE as the inflation marker. So CPI, yeah, that's important, but not as important as PCE, at least not to Powell and Company. And what we're seeing here, and by the way, I got stopped out of a short. They traded right up into resistance. The data, which was kind of weird, it was flat. And I was actually starting to talk about that in the mastery. A lot of folks might say, Rog, what about this data is so darn bullish? Well, the 60 Minutes interview that Powell did some time ago was really insightful. And one of the things that he did mention is that if we have just sort of a nice flattening of the inflation, not ticking up, but a flattening of the inflation, that they're going to feel that they are on the right track. Oops, move my camera. Sorry. They're going to feel that they are going to observe the data and say, yep, we're on the right track. And I guess there's a pretty good argument for that. But I will tell you this, we were just observing this in the room, that the target rate probabilities really haven't shifted all that much. The target rate probabilities for June and May, which is really those are the meetings that are probably the most focused right now, they're still mostly confused, right? Is there a chance, arguably a probability, that we'll see a cut in June? Yes, but May looks like a hold, gang. Yeah, there's 21% chance we might cut, but there's 78 and change percent that we're going to stay at the current levels, which is that 525 to 550 basis points, or 5.25% to 5.5%. That being said, this is not a super bullish result. It is a bullish reaction. So when I say bullish in terms of target rate probabilities would be that the column for 500 to 525 basis points, or 5 to 5.25%, that column should be getting taller. Now, it could as the day progresses. This is a very early look at some massive data. We do have some Fed speakers on the schedule, which is to say we get some data, and now we get to hear from Bostic at 10:50 a.m. Eastern and Meester at 1:15 p.m. Eastern. And then tonight, Williams at 8 p.m. And we're going to have three different Fed speakers tell us, right, what it is that we are looking at. Okay? So that's something to keep in mind. All right? Ultimately, what we want to remember, like we do in Charts and Coffee every morning, it's the pregame, right? It's the pregame. And so what I'm doing is I'm preparing for what we're going to do this morning. So let me show you what we're going to be focusing on. All right. So let's jump on over to the charts. A couple of things to keep in mind. What was neutral to slightly bearish was now clearly bullish. Why do I say that? Two things we're going to look at. We make it very much traffic light simple. We do have an uptrend on the daily. We do have an uptrend on the 5-minute. And now we are above the previous session close. That alone is a huge sentiment. So in the morning, when I go into the Sector Secrets Master Room and the bell rings and we start to trade, we're going to be looking at the long side All right. We're going to be looking at the long side. So ultimately, when I wake up in the morning and I'm looking at, say, the markets at 4 a.m., 6 a.m., 8 a.m., that's all pre-market psychology, right? After 8:30, we have this piece of data now that has firmly put the intraday action back in the bullish camp. Mind you, the daily time frames have been in the bullish camp, right? If you've been watching Charts and Coffee, our pregame show here, our discussion before the bell rings, you know that I've been pretty much imploring everybody to stay long. Stay long where? Stay long things like financials, industrials. We have, well, actually, proof's in the pudding. What are the open positions that we have in the mastery right now? GE, uh, sorry, I'm looking at my other screen. GE, American Express, Disney. Not a lot of tech in there, right? In fact, I did try a little bit of TSM, ended up taking a small loss there. We've had 5 swing trades in the last, well, not quite 2 weeks. We had 5 swing trades since last Monday. 4 out of 5 of those are moving and grooving with the overall trend, and they're long calls, right? If we think about index sector stock, we don't want to back away from that, right? We want to stick with the long side. I would have loved for PCE to give us a kind of a bad mood day. I would have loved that, because what that would have done is given us more opportunity at the long side of these uptrends. And please, gang, I don't know where the notion that there is overbought in an uptrend exists, but it is categorically incorrect. Trends are imbalances, right? We look for overbought and oversold in a range, right? What is a range? A range is basically kind of a balance of supply and demand, right? Trends, uptrends, are an imbalance favoring demand. What's demand? Demand is buying, right? Okay. Downtrends, by the way, are an imbalance in supply or selling, right? So just go back to economics 101. So in a trend, there's no such thing as overbought. That's just a fancy way of saying, I'm going to pick a top. Don't try to do that, please, gang. It's low probability, right? So what are we doing? We're buying the dip. Buying the dip works as long as the environment in which we're looking to buy the dip is an overall uptrend. Does that make sense, gang? Yeah. So as always, if you have any questions, feel free to type them in. Where is my clock? Sorry, I forgot to. There it is. There it is. All right. So, ultimately what we want to remember is we are dealing with an uptrend. We are dealing with an environment where we are preparing for higher highs because the Federal Reserve is going to cut rates. I'm not being predictive. That is pretty much what Powell has said. That's pretty much what Fed members have said. We just don't know when. And we use the data of Fed fund futures, which lead to the target rate probabilities, which is the information that I was showing you all. We talk about this almost every session here. This is what we're looking at. At what point can we expect rate cuts? And it's still June, gang. PCE has not changed that. It's just taken what was sort of a neutral, slightly bearish morning and just turned it back to what it has been, which is let's stick with the long side. So that is what we're doing. We are sticking with the long side. We're not trying to guess at what is overbought in an uptrend. My gosh. No. Okay. All right. So with that being said, as always, if you have any questions, feel free to type them on in. Line Watcher asks, is the PCE bullish? So there's two animals we got to talk about, Line Watcher. One is bulls and bears. Yeah, it's bullish. And doves and hawks, right? Dovish is favoring lower rates, which we are leaning toward. The Federal Reserve is preparing for a dovish pivot. And before they actually act, they talk, right? They're going to tell us, they're going to prepare us. We can see the trends in places that would say, hey, lower mortgage rates are coming. Why is ITB? This is the home builders. Why is this in Fuego? Why are Home Depot and Lowe's heading higher? Because we know lower rates are coming. We know lower mortgage rates are coming, right? And you're going to see certain sectors front run that soon to be reality. Yeah. So it was PCE bullish. Yes, but it wasn't actually as dovish, right, yet on the data as one would expect. Yeah. Happy Leap Day. Yes. Yes. Happy Leap Day. All right. Miles asked, Is there trading on this channel? There is trading back in the trading rooms once the bell rings, Miles. Yeah. And what we do here is prepare for the trading day. Okay. So if you're a little confused, yes, this is the pregame show. We talk about what we're going to do and prepare for, and in this case, I'll be preparing for more longs. Yes? All right, cool. All right, moving on. Let's see. So yeah, pre-market show. I'm here. We've been doing this for, oh my gosh, how long's it been? 3 years? 3 years. All right. How are CME probabilities calculated? Dave, cool question. I'm not going to even pretend like I can fluently talk about what did Richard Feynman say? If you can't explain something to a third grader or something, I rely on the data. As far as what the CME does to spit out these graphs, they explain the methodology. So if you want to know the methodology, they'll explain it. But what I can tell you is, I mean, it's a little involved, right? As you can see. But what I will tell you is this: it's using the Fed fund futures, which is important. This is not opinion, which I love. If you want opinion, turn on the television, right? This is people putting money where their mouth is, saying, you know what? I'm going to buy or I'm going to short a contract called the Fed fund futures, which is not unlike gold or silver or the S&P or crude oil. It's a futures contract where traders are betting on where the target rate is going to be from the Federal Reserve for that month. So it's kind of cool. It's kind of cool. Kind of cool. All right. So next up is, ultimately, what we want to remember is that when we are looking for opportunities in this environment, what's been paying me the most, right, is the long side, right? Well, we'll have an updated version of this. I'm going to do that this weekend. We're playing to the long side. There are no shorts in my book. I want to be as transparent as possible about that. If we're preparing for a dovish pivot, if we have the S&P and the NASDAQ moving higher, please, gang, wait for the pullback. Wait for those. This is the best part. Wait for those days where everyone is crying about the fact that we're not punching up to a higher high that day and we're pulling back down to support. As the old saying is, Wall Street is the only place they throw a sale and nobody comes. That's by the dip, right? That's by the dip. So I hope that helps. I hope that makes sense. And it's never going to feel like you're on the side of most opinion when on a down day, you're asking what uptrends are pulling back to a support level, to a, whatever your idea of support could be. It could be volatility. I love volatility-based support. It could be volume. Love volume. A lot of folks say price is the most important. I think that's incomplete. Price plus volume. We could have one share traded, one contract traded, 10 contracts traded at a high. That doesn't tell me a lot about broad opinion. There's not a lot of commitment, conviction at that level. Size matters, right? So volume is a really important overlay to price. In fact, I don't know that I would put price ahead of volume or volume ahead of price. They're both really important. And remember, there's 4 factors to the market: time, volatility, volume, and price. You work all of those together. Now you're looking at the markets in a 4D way. And you're going to have a huge advantage of people who are looking at just price and price-based indicators. That's a 1D look at the market. So definitely in terms of expectations, I love that y'all are looking at that CME data. Love it, because what it's telling us is what we expect. By the way, is Powell looking at this data? You bet he is. You bet he is. Do the Federal Reserve members know where target rate probabilities are based on Fed fund futures? 1,000%. 1,000%. All right. Okay. So please remember, moves that are just punching to higher highs. I don't want to engage the market at a higher high, right? We're trading at 50.98. I'm not going to buy there. All right, let's use GE. That was our most recent example, right? Okay, Rog, that makes sense, but what is it that you did? How does this work? Take a look at GE. This is one of 2 of my favorite stocks in the XLI industrials. Notice I'm not talking about tech. Notice I'm not talking about NVIDIA and SMCI. Let everyone else go trade that mosh pit. I want a nice, boring, organized uptrend. GE, this is a sexy stock. All right. Who would have thought 5 years ago we'd be talking about GE at 155 and one of the most beautiful uptrends in stocks? What we have here is a gray zone of volatility-based support and a gold zone of volatility-based resistance. I'm not having to calculate anything manually. I like as much as possible to be automated on my chart because that way, my opinion, my bias, my emotions, Spock was not my father. We're all going to be subjected to our emotions. I'm just going to wait for the green to meet the gray. And that's exactly what we had, right? So you can see here on the 28th, green met the gray, and that's a call. We just buy calls and buy puts. And by the way, for those of you wondering, Rog, how do we actively trade options? You put on 5 trades and you're day trading. How do I avoid the pattern day trading rule? I'll tell you right now, what we do in the Sector Secrets Mastery, cash account, long calls, long puts. Don't let anybody out there tell you that you can't make a perfectly good trading account growth scenario for yourself with long calls and long puts, right? You can. We do that every day in the mastery. So remember, long calls, long puts, they work as long as you're taking advantage of paying as little as possible for that call or paying as little as possible for that put, right? We're not going to chase it higher. By the way, 90% of traders are momentum traders. Something bursts higher, something moves higher, and they're going to engage in that move. Nothing wrong with that. But there's a better way. And we know this in the rest of our life. We wait for weakness. We wait for that edge, right? So I hope that shows you what it is that I'm looking at there. Okay. So that is what we're looking at there. And let's see, Fed fund futures are way better than opinion. I agree, Sam. I agree. I want to look at where the data is and the data that the Federal Reserve is watching, which, by the way, is why the PCE created the move that it did, because PCE is part of their models. Yeah, absolutely. Okay, so question on, bear with me here. Let's see. Bank of America. Oh, yeah. Jay, great question. So let me show you how much time do I have? Oh, all right, let's do this. Let me see if I can do a 3-minute synopsis of index sector stock and relative outperformance. And I'm not going to say this lightly. This will change your life if you make this a part of your life. Really simple. This is the way we operate in the mastery. This is the way I've operated for many, many years. We live in a high concentration weighted world. A very small number of stocks have a disproportionate impact on what the indices and sectors do. Know what those stocks are, know how they're organized, you're going to know how the broader averages are moving. So my favorite in the financials, Jay, have been just basically what I've been trading. Visa, JP Morgan, American Express. And we just keep rolling with the uptrend American Express. It's very reminiscent of the gorgeousness that is GE. American Express, GE, really same kind of look. But what about Bank of America? Here's what I'll tell you. Number one, unless you hate your money or you think you're going to find a top, please don't short financials. They're one of the top 5 strength sectors right now. It's why the S&P has been in fuego. It's got a huge amount of financials weighted within it. It's why the Dow's coming on a lot stronger. Industrials, financials, right? How many of you know that the Dow Industrial Average #1 weighted sector is financials? All right, there it is. So what don't I want to do? What symbols don't I want to trade? SPGI, no. Goldman, no. Morgan, no. Citi, no. Right? Anything that has the green trend. So Berkshire, JP Morgan, Visa. I skip MasterCard because it's kind of illiquid relative to Visa and it pretty much moved the same. Bank of America is a yes. But I've got to wait for Bank of America to do something like it did. If you want, Jay, take a look at the session 1, 2, 3, the third candle to the right. Is that down candle? I know it's really small. That down candle in the gray in Bank of America, that's the entry, right? Same thing with American Express, same thing with Visa. Wells would be fine too. So yeah, I like it, but I'm not going to buy it until the green meets the gray. Is that going to happen every day? Sadly, no, right? That's not going to happen every day. But if we wait for those opportunities, right? Let me show you what that looks like on the chart. So let me show you Bank of America on this chart. Okay, green meets the gray. So that means price is in that volatility support. Am I going to buy? So look, most traders are going to buy on the 27th. That's okay. We're probably going to move higher again and they'll be fine. But the traders that buy on the 26th have a better risk reward ratio. They have smaller risk and a far higher potential profit. And that is what I mean by an edge. Don't chase higher highs. Don't chase the expansion, right? If you have a congested market, buy support. If you have an uptrend, buy support. It's going to put you in a better spot on the chart to benefit from the upside, and it's going to be lower risk. It's also going to be lower cost. Isn't it less expensive to buy a call on a down day into support versus an up day through resistance? Absolutely. And cost is part of risk, gang. So yeah, I like Bank of America, but it's got to be a day like the 26th. Jay, do you see that? So our sole financial exposure right now is American Express, and same idea. We waited for the green to trade into the gray, right? The green candle into the gray zone. All right. So that's really it. That's really it. Okay. I'm out of time here. So as always, gang, thank you so much for being here. I'm going to hop into the Sector Secrets Mastery where we're going to put on more trades like this. And we will, let's see, I think that's it. Does that, Cliff? No, those are all swing trades. Yeah, my day trading is a different account, quite literally. And I day trade futures and I day trade options. So it's actually two different accounts. So those are all the swings. Those are all the swings. All right. That is it. All right, gang. I'll see you tomorrow, same time, same station. Be good to each other.